Good afternoon, everyone, and thank you for joining us for another one of Avant-Garde Trading's free educational trading webinars. We are thrilled to host Vlad Karpel here this afternoon. He is joining us for the lunchtime options trading, and he's going to be focusing on how to sell options and capitalize on market weakness. Really great topic. We're excited to have everyone here. Vlad, I can see you. Can you hear me okay?
Yes, perfectly. Loud and clear.
Okay, excellent. I can hear you as well. So whenever you are ready, you can pull up your presentation and get the ball rolling. I will remind everyone with us live in the Zoom room, if you have questions during Vlad's presentation, please type them into the chat box or the Q&A box, and I'll get them over to Vlad to address at the end of the webinar.
Perfect.
All right. Yep, I can see your presentation title page, so feel free to take it away.
And Keith is here too. Keith, you can hear me fine?
Oh, yes, it does seem Keith just joined. Hi, Keith.
Yes. Hi. Sorry. Can you guys hear me okay?
Yes. Loud
We
and clear.
can, yes.
Perfect.
Thank you
Thanks
again.
for joining.
All right. So again, thank you for giving me opportunity to present again. Continue this series of webinars on different topics. Today we're going to talk about current market conditions, right? We had a pullback, and then how do you take advantage of the spikes in volatility, specifically selling option premium, or do you go long with option premium when the market pulls back? So for those of you who are new, welcome. This is my brief bio, right? If you haven't seen this before, basically my background is in technology. I was a chief technology officer, was on executive board of several fintech startups here in Chicago in financial space, hedge funds, broker dealers. Some of the companies went public, and decided to manage my own money. I've been doing that for over 25 years now, using the technology, using the latest advances in artificial intelligence and neural networks. I have a lot of passion for teaching and doing these kind of presentations. We also have a live trading room where Keith and I do trading, and combining basically my experience in trading and managing money into one. And I'm super excited that Keith with Option Hotline was able to join us today, and we've been working for over a year now, almost 2 years, probably a year and a half. So Keith, you want to give a little background?
Yeah. So thank you again for having me on as well, and I'm looking forward to hearing some more of what Vlad's got to say. So my background's a little bit different from Vlad in that I started as an options market maker down on the pit on the floor of the CBOE in 2005. So my background's much more focused on the market making, proprietary trading, and the options analytics. And so I think that we've got a great synergy of ideas that come together here between Vlad's background with AI and quantitative models and stuff that's way over my head, and my background with the options analytics and trying to produce the most efficient option structure for a trade strategy. I think we bring a lot of good things to each other's table here and really work well together. And so I've been really enjoying working with Vlad here over the last about year and a half, as he mentioned.
Perfect. Thank you. We already went through disclosures, so I don't need to spend time. Again, just encourage you, since I am going to go through specific trade ideas, specific option ideas, it is important to visit options. When you get a chance, pause the screen and you can visit this link to understand the risk and suitability associated with trading stock and options. And you can read the remaining of the disclosures. All right, so some of the common obstacles, right, that all the traders are facing. One is leveraging capital, right? Average account, at least on Yellow Tunnel, is about $10,000 in broker dealers. I think the average account is around $10,000. How do you leverage your capital? Second challenge is how to properly manage and adjust your position, especially in market volatility, where market is driven by the news, right? You have these announcements or tweets that says escalation in tariffs, de-escalation in tariffs, shutting down the government, reopening the government, geopolitical risks. So market moves, and it's very important to have skills or approach to properly manage and adjust in your positions. And that's another a very important topic that we discuss in live trading room and kind of common obstacles. Impatient short-term focus, one of the reasons, behind the yellow tunnel is trading psychology, right? Especially when the market moves and market can open 2% down and close at 2% up. You have to have a specific trading plan, right? Management versus speculation, right? So a lot of it boils down to, again, if you've been in my presentation, into positions, right? And position management, risk management, especially when you see VIX going above 20, right? The average is usually anything below 20 is considered to be kind of a normal market that moves less than 1%. S&P moves less than 1% a day. But once you have uncertainty and escalation in tariffs or government shutdown, not that I think government shutdown is causing the volatility, but at least tariffs and different relationship between China and the United States is creating the volatility. Then anything above 20, when VIX goes to 25, I think highest was 28 print, then you're definitely getting a lot of whipsaws, and it's very important to have that risk management in place. And from trading psychology, you want to avoid chasing the market, right? You want to avoid buying when the market rebounds and then selling when the market sells off, right? You kind of wanted to do the opposite in the market corrections. So trading plan, Keith and I spend a lot of time. We do have, coaching. We have a live trading room where we always talk about trading plan. And always keep in mind there is no universal trading plan. Everybody is different, right? You need to have a trading plan custom to you because you're in a different path of your trading journey, right? Some of you just started to trade, some of you have been trading for many years. And also very important, determining, predicting how you will react to market conditions as opposed to just predicting the market. And, some of what would help me if we can actually type in some of the just the background. Maybe you can say, how long you've been trading, and what portfolio you managing, right? Because when you manage in small portfolio, when you manage in large portfolio, when you have different risk tolerance levels, then that custom trading plan is becoming very important. So trading system, I mentioned my background is technology, building models, quant models, using neural networks, AI. And basically what we're trying to do is to find signals that can give you higher probability of success as opposed to average ETF, S&P, so we're trying to either beat the benchmarks in S&P or prospective industries. So, and usually the way you trade in these market conditions when the market becomes volatile, right, is you get daily list of stocks based on ranking. You can get it from yellow tunnel, you can get it from different, I'm going to show you the bar chart side and different other sides, right, based on statistics. You can look at seasonality chart with trends. You can look at the different forecasting toolbox, basically forecasting tools that can show you what the trends are for the next 10 days, right? We're approaching end of October. We have imminent decision about whether we're going to impose 100% tariffs on China, right? End of the month, we're going to have a meeting and there will be decision whether, I think November 1st is due. And that will create volatility in the market, right? The market could rally 5-10% between now and end of the year, right? It's not, maybe 10% is an exaggeration, but 5%, right? Market can go up and get the 7,000. A lot of people calling for 7,000 by end of the year and SPX. So market could pull back 5 to 10% if there is no agreement and 100% tariff is taken into effect. There is no delay or a solution. So predictive models are important and they don't have any bias, right? They don't have any opinion about where the interest rates are going. They don't have any opinion about what the decision between China and the United States will, whether there will be amicable solution or whether there will be escalation. So it just basically tells you the buy and sell zones and the trend, right? And based on the buy and sell zones, you can determine if the market reached oversold conditions or when the market reached overbought conditions. And the idea that you're buying in the green zone, right? Whatever that signal is, basically saying the market is oversold and looking for some kind of bottoming process, and then you're buying. And then you want to avoid buying in the red zone, right? This is just an example of the predictions. You always want to kind of, when you reach overbought conditions, you're trying to raise cash. You can sell stock, you can hedge your portfolio by buying, puts or put spreads. And then when market is oversold, you want to buy, right? So definition of selling into strength, right? Right now we're again at last time I checked a few minutes ago, we're again at all-time high, right? Yesterday we gave up half of the gains when there was a potential escalation, imposing restrictions on the software we're selling to China, market pulled back, right? And today, de-escalation and market, we're in the middle of the earnings season, is again retesting that 7,000 level on SPX, right? Trading above that level, approaching very key support and resistance levels, 6,700 on SPX, right? And potentially can go to 6,800 and then 7,000. All right, so now you've kind of faced with decision, if we break the new all-time highs, then you probably want to be long the market. But if we are unable to, because of the uncertainty about government shutdown, uncertainty about China and US reaction, then maybe this is the time to sell into strength, like for today. And we'll go through a specific example. Buying into weakness is the opposite, right? It's S&P 500 is in the midst of the pullback from multi-year high, and there are two camps forming, right? If you turn on Bloomberg or CNBC, you will hear that one side believes the beginning of end of the current bull market, right? That AI hype is overdone, very similar to technology bubble, dot-com bubble we had, in close to 2000, right? And almost 25 years ago, right? The other argument is that the current pullback, whether it's 4%, 5%, even 10%, considered to be a healthy sell-off that occurs during even the strongest bull market. And we're still that the long-term bull market is intact. AI demand is here to stay. And even if we have a bubble, AI bubble, we're just in the beginning phase of the AI bubble, not at the end, right? So I personally fall into the later camp. I think there's an opportunity to buy into the weakness, even though I still think that we could have another 5-10% correction if there is no agreement between China and the United States, kind of similar to the first term, Trump's first term, where I think it started early in September. They couldn't reach an agreement, and we imposed the tariffs, and the market pulled back 10% initial drop. Then there was a policy mistake on interest rates, another 10% pullback. So we could have, I would not be surprised if we have 5 to 10% pullback, probably not because of the earnings season, but because of some of the geopolitical risks. So I usually look for, volatility increase when VIX, you always confronted with the question, right? When the market sells off or when the market rallies, right? If you're buying into the weakness, do you go long volatility? Do you buy calls and puts, right? Based on the VIX? Or do you sell put spreads, right? And that's kind of, a lot of it depends on historical volatility versus implied volatility. You want to look for signs of the bottoming process if you're going to buy into the weakness, right? You want to see signs of bottoming process. If you sell into strength, you want to see signs of the top building process. And when VIX above 20, you usually look for 3 to 5% movements in a short period of time. And you can use traditional technical indicators like envelopes, Bollinger Bands, other traditional technical indicators, or you can use models, neural network models, what we have at the yellow tunnel, or some other ways to determine what the supports and resistance are. So this is an example where you want to be long volatility, right? If you think that the worst is over and there will be an agreement between China and the United States, and we're approaching 6,700 and then eventually 7,000 by the end of the year, then you can buy a call, right? And we went over, the nature of the calls, how to strike price selection is very important, right? And then expiration months, right? And you can actually see right now, if you look at the gamma exposure, right? I'm going to use positioning. Positioning, going back to game theory, is very important to see what other people are thinking. And if you look at the SPX, probably the most liquid instrument that shows you supply and demand. We can look at all expiration days. Let's look at the 60 strike, 50 strikes. So you can see if you want to select expiration months, a lot of people are hedging, right? A lot of people are hedging actually into December, which is unusual, right? Because November might not be enough, right? If there is any negative news that first week of November about the tariffs or government shutdown gets prolonged further, then you might not have enough time to repair your position. So now most of the position is actually in December expiration. So if you want to buy into the weakness, today we're close to all-time high. Let's see where we are. So yeah, so S&P QQQ basically retested all-time highs, and we were as low as 590 on QQQ. Let's look at SPX since I'm using SPX. So SPX was 6550. That was the low 6500. A lot of the support at this level, right below 50-day moving average. And then overhead resistance is at 6734. So if you don't think we're going to break through this overhead resistance because we're not going to reach an agreement with China, then this is opportunity to go short, right? You can sell, maybe take this opportunity to reduce some of your long positions. Like we in live trading room, we had Halliburton. Pretty sharp pullback with the market. Now it rebounded. This is my opportunity to either close the position or, reduce the position exposure, right? At this point, you wanted to have cash. In live trading room, I usually suggest 30% of your portfolio to be in cash, right? Maybe now you go to 40% of your portfolio, 50% of your portfolio in cash. Or you can hedge, right? You can buy puts or put spreads to hedge your position on SPX. So it's either traditional technical indicators, or you can, use the bar chart, or you can say, okay, I'm confronted, do I buy long call, right? I can go into December, like we were saying. So let's go into December. Because that's where majority of the concentration. And let's say, I think we're gonna go to 7,000, right? We're going to 7,000 for the long call. So then if you click on SPX long call, this is the profile, risk profile, right? The most you can lose is $4,560. Let's use SPY because not a lot of people like to trade options SPX because it's a lot more expensive. SPY just divided by 10, so these examples are not as scary. All right, so let's say you think we're gonna get to 7,000, right? 700, so 700. So you can buy a call, right? You can spend, maximum debit is $416. So that's the maximum you can lose, right? It gives you probability of profit. Right now, there's only 15% probability by December we'll reach that level, right? But you have infinite return, right? If market reaches 700 or goes beyond that, then you have unlimited profits between now and December, right? So now you're faced with the question based on volatility, right? IV rank is elevated, but not huge, right? Implied volatility versus historical volatility. VIX was right lower, right? We were at 28. At 28, maybe it makes sense to sell puts, but when VIX is back to 17 and you see that the fear is dropping, okay, then maybe buying long call because implied volatility drop makes a lot more sense because you're paying less premium. Last time we talked about debit spread, then you can reduce your instead of spending $416 on that 700 call, maybe it makes sense to spend only $200 by getting to a spread, right? If you don't think we're going to break 710, then you buy 700 and you sell 710 call, right? You look at the volatility and you look at the trend, right? Based on traditional technical indicators, based on AI models, medium term, long term, we're still in uptrend, right? Average, it used to be much stronger, now it's getting too soft, right, because of the recent pullback, but it gives you statistical technical indicators trend analysis, and you also can look at the support and resistance, right? You can look at the, let's go back to the gamma exposure. And basically make a decision on the positioning, let's say SPY, well, SPX is more visible. Let's look at SPX. So you can see next overhead resistance is a 6,800, right? So this is your first resistance. And then your support is 6,700, right? This is where most of the position, the highest put and call concentration, open interest is in 6,700. And then if we don't, if we breach 6,700 like we did yesterday or day before, then you would, this is some support number 2. So if you buy into the weakness and we are at the that 6,700, right? We weren't able to breach that level. Then you probably want to wait till you buy it at these levels, right? If we stay above 6,700, did the market drop? I'm not sure. Let's see. Or is this just a delayed data? SPX. Where's SPX? SPX is actually yeah. So it went up above that level. So if you think it's going to stay above 6,700 and break out, then this is where you would either buy call or sell puts. Probably right now buy call since the VIX is lower. But yesterday when the VIX jumped and we were as low as 66.50 yesterday, and 50% retracement, this was a perfect opportunity to go long, right? To go long, and that's where you would either buy a call or sell a puts. Personally, our position until we break this level, I would rather sell into the strength, right? Sell into the strength where I would buy a put, right? Instead of let's go back to that put and call analogy, right? Right now, I'm more inclined to even go to November or December and sell premium, right? Or buy a put. I mean, VIX is low, maybe buy a put, right? So you would go in and you buy a long put, right? So you kind of same analogy. You can say, well, I think we're going to revisit, let's do SPY again. I think we can revisit, 650 level again, right? So I'm paying $8.48 to buy a 60.50 put because I don't think we're going to break through all-time highs. So then kind of reverse trade, right? It gives you probability, 25% probability. We're going to revisit the 650 level again, right? That was the recent low. And it cost, the maximum loss is $848. And same thing, if you want to reduce your cost and risk less, then you would do a spread. You buy a long put and sell put. So you basically, you sell into the strength in this example. Yesterday, I would use, if you're doing short-term trading, I would buy a call and call spread. Any questions so far? So one of the difficult decisions is do you sell premium or you buy premium, right? When the VIX is low and rank low, options are cheap. So personally, I would prefer buy. In this instance, in this setup, I would hedge my portfolio and buy either put or put spread, right? If we reach recent lows, then I would turn around and based on volatility again, either sell a put or go long with the spread based on what the IV volatility at that level is. Any questions so far? Questions. Let's see. Simon,
Thanks,
welcome.
Vlad. There hasn't, just a lot of people saying, hi, great to be here. So far, so good.
Perfect. John, thank you for joining. Dr. Simon, thank you. I see a lot of Yellow Tunnel subscribers, familiar faces. John, Vlad, other hedges, gold, silver, platinum, puts. Spiders, SQQ, VIX calls. Yes, there's the other hedges. Gold, you have to be careful. It's been a great hedge, but we talked about volatility squeeze, right? This is a perfect example of a gamma squeeze where on above average volume you have reversals. I actually thought it was here, the reversal. I was wrong but here you have this huge volume in whether it's GLD or gold futures, right? I think I have gold futures somewhere I'm watching. So that I would personally be a little bit more careful. You have above average volume reversals. That doesn't mean this is the end of the rally. I'm not going to say this is the top, but probably consolidation for the next few weeks, maybe even next few months is in order. So gold might not be as good of a hedge right now. All right. If there are no other questions, Keith, I know Keith has a lot of opinion about volatility and when you long or short the vol. Any thoughts, Keith, on how to use current market environment?
Yeah, no, so thanks, Vlad. One of the things that I think needs to be, I guess, understood as best as possible with volatility is that it has a strong negative correlation to the markets. So, the idea that John posed of buying VIX calls, the general thought is that if the market were to reverse, the VIX goes up. If you're buying puts to hedge your portfolio and the market goes down, you get a kicker from that implied volatility rising. So the premium goes higher in the put. And so you may not need to see prices drop to 630 in SPY to generate a profit from a 640 put. You can actually get it off of some of the volatility premium. But really with a hedge, it's all about balancing out what your expectation is and where you're planning to exit. Because if you just buy and hold the hedge, that hasn't been working. That buying the dip has been working still. So, you start buying a bunch of 650 puts and then hold them all the way to expiration. Over time you end up kind of just losing the money off of decay, right?
For sure. Thank you.
Yeah.
All right, guys. Any questions for Natalie or I or Keith? I think, Natalie, do you mind if we talk about that live event before we jump into this last slide?
Sure. Yeah, let's do that.
Yeah, so this is John. I know we spoke about this for the past, Dr. Simon, for the past few, close to a decade, probably, right, John? And we met in Chicago CBOE building. Now we have this live event at CME building, and the opportunity is that Keith and I, and so, Ken Keating from CBOE Online Education, and Dr. Duke Given. So four of us will be there live, and this is November 6th. So if you're in Chicago, or if you love to visit Chicago in November, it's nice and sunny and warm, then please try to make a trip. This is an opportunity to meet us in person, ask any questions you might have about your subscription or anything, or if you want to learn more about us. It's going to be a great event. It's probably close to a day. We're going to have, breakfast, coffee, go out for drinks afterwards. So this is a great opportunity we talked about this for many years, right? And we've never actually, I think we have an event at SIBO. So this is kind of, and it's been a long time ago. So I'm excited about this. So hopefully you guys can join me. And Keith and Natalie is going to be here if you want to meet Natalie. If you're not interested in meeting us, but you want to meet Natalie, then definitely this is an opportunity. I'm going to drop a link inside of the chat.
I was just going to say that. Yeah, thanks, Vlad. You can put the link in there. Yeah, feel free to peruse. This is an option hotline event sponsored by Avant-Garde. So check it out, reach out with any questions. Just a reminder, also write down the contact information you're seeing on your screen now. If you have questions about this particular webinar and you want to reach out, feel free to do that. And I'm going to take the screen back just for a minute as we're wrapping up here. Just a reminder as well, if you are not already trading your stocks and options with Avant-Garde on our brokerage platform, I encourage you to check it out. Go to tradeagt.com. We have a great opportunity through the end of the year. You can open your trading account today and take advantage of commissions and membership pricing for free through the end of the year. So definitely check it out, tradeagt.com. Open that account. and get started trading. But I do want to thank Vlad and Keith both for taking the time to put the presentation on today and for joining us to get some good trading education. We really appreciate the time you take. And for everyone who joined us live and asked questions, thank you very much for getting involved. And we hope to see you all at our next webinar. Vlad will certainly schedule you again. So keep an eye out, everyone, on your inbox. Look for those emails from info@tradeagt.com. That's where you're going to get sent the recorded replay of this afternoon's webinar. Again, info@tradeagt.com. Make sure you check your spam or your junk folders as well. Mark us as not spam so you get those replay links. All right, everyone. Until next time, good trading to all. Have a good rest of your day.